Microsoft has joined NVIDIA in the $4 trillion market cap club. Pretty remarkable. We're still waiting on Amazon and Apple earnings. You got any predictions for that?
Uh, well, I don't want to try to predict, but I'm not super optimistic. But I'm not. I mean, it's the consumer discretionary at the moment. I think what we're seeing is a weakening consumer, which sometimes people see that uh, as a bad sign for the markets, but as long as we have liquidity in the markets, it should be fine. But there is sign of a weakening consumer, so Amazon, Apple naturally probably isn't going to have a huge upside.
Welcome, Jack and Alex. Good to see you guys in here. We got a great crowd in here today. We have another Peter from the Netherlands, our second. So,
We have another Netherland Peter.
yeah.
Wow. What are the chances of that? What's up, Peter from the Netherlands? Are there a lot of Peters in the Netherlands? Maybe that's a common name. What's up, everyone? Jack, how you doing today?
I'm doing great. How are you doing, Alex?
I'm good. I'm good.
Yes,
Kane.
what's happening?
Good to see you guys.
All right. So we have some some lackluster earnings from Microsoft and Meta there. Just kidding. They were crazy good, right? We're gonna get into all that. Before we do, real quick, gotta throw up this disclaimer slide, or else Carol will hate me. We're not financial advisors. Everything presented is our own opinion. Suit your own needs, do your own research, seek the advice of a licensed financial advisor if necessary, which we do not pretend to be. Know that all investments involve some form of risk. There's no guarantee you will make, save, or do anything with money in the markets. Nor is there any guarantee you won't experience a loss when investing. Always remember to make smart decisions and do your own research. Merceline, good morning. Do you have a new last name there, Merceline? Did you change your last name? Anyways, right, Meta, let's get to it. Just the big earnings reports. And pretty insane, honestly. Revenue topped it by three some billion. Earnings per share, a little less than $2. I mean, it's crazy. So my question to you both, well, let's just go. And then we have also Microsoft, same thing, right? I mean, earnings per share was way higher, revenue was way higher than expected. Even Ford, right, did way higher. I mean, this JPM's soaring. I'm going to talk about that in a second. But my question to you guys, right? Meta, Microsoft. Jack, you have a position in Microsoft? Are you selling anything on Microsoft?
I always have a position in Microsoft. I've had it forever. I've been selling calls on it like it's nobody's business.
I mean,
I'll tell you one thing about this. You see these numbers like this. Two things. First of all, analysts suck. I just got to say it.
right. They're paid to have an opinion, not necessarily be right, right?
You're making a couple hundred, 300,000 a year, and you can't get anything right. These guys, they're missing all the time, and I just don't understand how that could even be that $3 billion difference, and you can't figure that out. Wall Street's doing a terrible job.
What is I mean, is it just incompetence, or is there a game there that's being played?
Completely incompetence, right? They got it wrong. I'll tell you another thing, two more things I got to tell you. That to move a stock that much of a percentage when it's already that
yeah, we're not talking penny stock here.
Incredible. That is an incredible to push something like that 7%. That just blows my mind. The other thing that's funny is all this staring at the tech, and check out Allstate. They got the biggest move of the day. Thing popped and stayed
over the 50 now. That's a pretty solid support line right there.
I'm long Allstate too in the dividend portfolio in full disclosure, but wow, what a surprise on Allstate. No tech, yet this thing is up 6.4% for the day. Again, another big company being moved big percentage points in one day. That's a lot of money coming in. Same thing on Meta, unbelievable. And again, how do you miss? How do you miss as an analyst? How do you get it so wrong, right? Man, all there is data all over the place. I mean, somebody would have had to get this right, but nobody did, and that shocked everyone. And yeah, it was a great pop yesterday after the close. If you guys cannot trade in the after hours, I would highly recommend you get yourself on a platform where you can trade stocks in the after hours because there's
Schwab does that for everybody who wants to do that. So if you're not on Schwab, I think Schwab. I don't know what other broker. Do you use Schwab, Jack?
I use Schwab.
Yeah. So Schwab allows that. Kane, what do you use?
I use several platforms. I've got Schwab, I've got Fidelity, I've got Tradier, I've got Tasty. I've got them
Okay.
all.
You got E-Trade, Hood. You got
Right.
yeah. I don't know if Hood actually allows after hours trading. I don't think they do.
And not that I know of. Yeah,
I
but
had this
I'm not a
Also,
big hood.
Schwab has a list of stocks now that they're going to trade 24 hours a day, 5 days a week.
Hey, Tesla is one of them.
Mm-hmm.
So
That's the Wild West in the after hours because there's no market makers to stabilize prices. So
be careful.
yeah, but it's fun. Like those guys that threw their Microsoft and their Meta out for sale yesterday after the close, get 555 and then watch the stock come to 535 on Microsoft. That's a great way to take advantage of the overreaction, right? You get to always have an overreaction to this earnings, and that's why you see it gap up, and it just can't hold that high, right? So if you got the nads, you could go in there and short some of these things after the close that have popped real high like that, but you got to be nimble. But that after hours is a huge advantage.
Yeah, I was thinking of this strategy. So if you look at the price on the close and like an at the money, or you just look at the delta, right? The price on the close and the delta of the at the money, slightly out of the money options.
What's a delta?
Oh, what's the delta? Yeah, right. I know.
I'm sure there's other people here that want to know what is a delta.
Oh, a delta. So delta. Let me pull it up. So when you go on, let's go over here. Uh, where's my? So let me go over to my Schwab. Man, I gotta get an actual computer instead of a laptop, I think. Yeah, here we go. So folks, delta, right? Is here. This is the delta. It's a Greek. Now delta is basically how much this option. So this is the let's just say 80 cents, right? This is how much the this price of the options contract will change for every $1 increase in the underlying. That's right, Kane?
That's right. Yep.
Yeah. So that's what delta is. Now this is roughly an approximation of what your probability of profit is for this. So if you were to take this by this expiration, right, it'd be probability of not probability of profit, probability of being in the money would be 58%. And so if you take like an out of the money option, the delta decreases either direction. You can see here the delta. So negative. So don't worry about these negative delta values. I mean, it's just a value, right? I mean, negative delta for the put is because it's going to the downside, but it's really 52, 57, right? So this has a 52% chance of being in the money at expiration on the 22nd of August. This has the call has a 7.5, has a 58% probability of being in the money at expiration. You go down, that percentage decreases, right? So for a put, if you took a put on NVTS, Navitas Semiconductors we're looking at, you would have basically this would be an 88% chance of, or sorry, 78% chance of being uh out of the in the money, out of the money at 22% chance of being in the money, 78% chance of being out of the money at expiration. So the probability gets lower that this would be a winning trade, right? That's delta. I hope I haven't confused anyone. Did I explain that effectively?
I
Pretty
think
good.
so.
Okay. Okay. So my question is like I was playing around with the after hour stuff, but then looking at if you do have these big pre-market movers, looking at where they are pre-market versus where they were at close and what the delta was at close. So I don't think this delta is updated after close, is it, Kane?
No. Mm.
Is there any VIG there where you can okay, so if it's up if it's at $8, this was, and you could calculate it based on the delta here at the close. Could you put in a pre-market order if you think it's going to gap up and get filled lower and then instantly get that VIG arbitrage when it pops at the open?
It'd be pretty tough. That market maker would have to be someone might get fired.
You'd have to be asleep at the wheel.
Yeah.
The option, you can't trade it after hours. That's the hook right there, right? Whereas
Right. No, you can't. I was just wondering if you could put in something based on that delta that's lower than what it would be at open, and then you could kind of get that quick pop. I was just wondering that. Maybe it doesn't work. Which it doesn't sound like it does. But that is delta. So when you're thinking about opportunities, right? Like I know we were talking about this the other day when you're selling credit spreads. I usually try and go for 33 delta spread for the short. So you can go, I know Jack, I know you go more conservative and you don't use delta, but I think we sort of narrowed down. You kind of go on the 20 delta or so based on
I think we lost Jack. Looks like he dropped off.
Oh,
He
no
got
worries.
so upset about your question about aftermarkets.
I know. Sorry, Jack. I did not mean to make you mad there. But what do you I mean, so we go back to these charts, right? What Patricia's asking a question about delta. Delta is not, no, Patricia, did I answer your question? Delta is basically just the percent, the percent, the how much the stock is, this underlying contract is going to change in response to an underlying $1 price move and of the underlying stock, right? Now I know there's other stuff, right? There's gamma and there's theta and all that stuff to incorporate, but that's just the simple heuristic, right? The Greeks all kind of are interlaced there. So definitely, I know I like to use it. Jack doesn't care. That's cool too. I do like to use delta just to give me a sense of, especially when I'm selling spreads, what it's going to be. And Kane, is there any way you use delta in particular? Do you use delta?
I don't use it that often. The only time I might use it is if I want to compare the opportunity on a short-term trade. So if I'm swinging for just a couple of days, and I want to say, well, do I want to go in the money? Do I want to go out the money? Do I want to go at the money? And I'll compare that. I'll try to optimize my reward risk ratio. And so one way of doing that is say, okay, so for example, the one you're on right now, that 57 delta, what is that as a percentage of the bid and the ask? Okay, so at 85 cents, so that's 60 out of 90, so that's about 66%, meaning that if NVTS moves $1, which is pretty unlikely on a $7.50 stock, but if it moves $1, then I could potentially make 66% or lose 66%, depending on which way it goes. So I want to know that sensitivity, especially, and again, on NVTS, it's not going to be too meaningful because we're not expecting that thing to move $1. Okay, so
Right.
it only becomes useful in higher priced, right, like Apple. Okay, Apple could easily move $1, And so if I'm only chasing that $1 move or $2 move inside of Apple, then I can compare the strikes that I'm and what gives me the best reward risk ratio.
Awesome. Yep. So yeah, but that's what Delta is, folks. Now, my question, right? We've had this week was obviously big earnings. We've had a ton of tech. We still have a few coming up today, right? We have Amazon and we have Apple, both post market. So, and we're looking at this gap up, right? Obviously, Meta's selling off. I mean, what do we sustain these levels, right? I mean, do we come back down and fill this gap on Meta, on Microsoft? Jack, look at that. I mean, what you're saying, big sell off. Looks like likely that we're going to do that. It's on today.
I think all gaps have to be filled in at some point down the road. But again, the reason that it got that high was it was an overreaction, right? That always happens. And whenever you have an overreaction, not normal. So as this thing comes back to normalization, that gap will be filled in, which is why in the pre-market, I like to see what's gapping up, because sometimes this stuff is just gapped so much overbought that you can short it right on the open and then, see this kind of pullback happen.
Yeah.
But I think that gap will be filled in. Look at that's an abnormal move up. So here's a good tip. If you're long that stock all the way from the left to now, that pop, that's your sell signal right there. Right? That's an abnormal move higher. You got to take advantage of it. You can always get back in, but man, when you get a big jump like that in one day, that's abnormal. That's your sell signal. Take your profit. The best part about trading is taking a profit. It doesn't get any better than doing it on a gap up.
It doesn't matter until you're taking that profit, right? It's all just numbers on a screen until you actually
But
have
that's just me. I think the gaps will get filled in. I like the overreaction. I like to see all that money coming into it to push it up high like that. That's pretty cool. I love volatility. And when you get a gap up like that, you just set yourself up for more volatility in the stock.
Absolutely. But I mean, it does look, based on like these earnings, I just don't, we have Bessent teasing a trade deal with China. I mean, we're just if that I mean, I don't see, it looks like these markets right now, there's no sign of slowing. Now, there was a lot of both of these companies, Meta and Microsoft. Trump extends Mexico's 25% tariffs for 90 days. Okay. The ever-moving goalpost of the tariff deadlines. They both are investing a ton of money into the AI build outs. I was actually reading this dude on X who he he was just talking about, he was inside of Meta, and he actually saw an offer come across his desk for somebody else for like $1 billion in compensation plan, which is crazy, just for AI build outs. So all these companies are they're doing a ton of, both Microsoft and Meta are just pouring billions into getting these data centers built out and getting these AI structures built out. And so I guess that, obviously with a lot of expenditures, right? It's not super great. I mean, it does dip into their free cash flow, but they also have an amazing free cash flow. So it's just like this AI snowball effect just seems to be accelerating. And then we have Nvidia today, which will be interesting to see how that goes. But like I don't know what, I mean, where do we go? Are we just maybe fill in this gap and just keep churning higher? I mean, there's nothing to really indicate we're not going to churn higher.
We talked about the other day with earnings, what's just as important, and maybe more important with earnings, is guidance, right?
Yeah.
You read what you read, and the number that's printed on the earnings, it beat or it didn't beat. But then there's always one little thing someone's going to say. It's come out of their mouth. So you got to use your eyes and your ears. And what he said, what Zuckerberg said was, we're starting to see where AI is doing its own thing within the company and making
Yeah.
it efficient. And people just went crazy because all this time, but back before Google would spend all that money. And they're like, you're idiots for doing all this spending because there's no return on the AI investment yet. But when Zuckerberg just said that, that's always these things with earnings. They're just going to say one little tiny thing that's going to really make it, hop or drop. And I think when he said that, that means that this stuff might be coming to fruition, and they may have a direct earnings correlation to it in the next quarter. That'd be fantastic. The
Well, you
other
can
thing,
see here
remember,
27 billion
yeah,
total.
the other thing is they can say we plan on spending 700 billion, but you can't buy everything you need. Even if you had an allocation of 700 billion, you can't buy the energy, right? There's a bottleneck right there with the energy. You can't buy that. You can't buy all the chips you want. Nvidia is only going to sell you so many, and everybody wants their chips. Elon Musk is trying to cozy up to Jensen just so he can get his order at the top of the book. But it's you can't buy everything you want. So they could say they're going to spend all this money, but there's not enough power even out there, even now, to do. You can't buy it. You can't buy everything you want. So I've never seen a situation where a company says we're going to spend X amount and it's a huge amount, and there's just not enough of that stuff out in the market for them to actually purchase.
And here's that quote, Jack, which over the last few months, we've begun to see glimpses of our AI systems improving themselves.
Yeah.
And the improvement is slow for now, but undeniable. Developing superintelligence, which defines AI surpasses human intelligence every way we think, is now in sight, which is
Yep, that's it right there. That's the thing that's lit the spark right there. And that's a bold statement because he's going to have to back that up next quarter, right?
Yeah, he is. I mean, so there was a line in here, and I can't find it right now. They did not provide an outlook for fourth quarter sales. Said it would expect the year-over-year growth rate in that quarter to be slower than the third quarter, but they actually had a huge outperformance and all on their ad side, and they've been using AI to improve and streamline the ad side of Meta, which is pretty. I mean, again, that's their big thing, right? It's the advertising, which is
Yeah,
why
that would be the more important thing for me is like, how are they using AI in order to either be more profitable or get more revenue? Because in the end, if you're spending a whole bunch of money onto AI, how does that come back in terms of a return for a company like Meta? I mean, Microsoft can put out a product, AI type of products, but is Meta doing the same thing? I don't know, because as far as I know, by far their main driver is advertising. So maybe you deliver better advertising to better audiences, but does that mean they get to charge more for their advertising, or more people want to advertise on their platform? So if there's no direct correlation in their business model, an increase in their business model, then to me that's just a big gamble and a big dump of money into just because it's the next thing.
right. And let's not forget, Mark Zuckerberg did do a giant gamble to the metaverse and did not work out. But what's interesting about this is they've kind of let that go. You can see here greater efficiency and gains across our ad system. Yeah, I mean, I think that's the correlation with Facebook. And I don't know, again, I don't use Facebook. It's definitely not my generation thing anymore. I guess other people do. I mean, there's WhatsApp, which is a huge chat, this service, especially for outside of America. People usually will just call. I go to Latin America a lot, and everybody just uses WhatsApp. They don't really use text messages. So that's an ad, and I think you can get ads in WhatsApp, but it's still in the Facebook, Instagram. So really, again, really want to dig down. What is here we go. Daily active people for Meta's family of apps grew to 3.48 billion. That is insane. What's the world population now? Like 9 billion. So they have a third of the a third of the world, over a third of the world on their systems. Beat the analyst estimates of 3.45 billion.
Shocking.
So
Beating analyst estimates? Wow.
right. Yeah, I know. But this is just an insane number. So 3.48 billion people. That is a lot of, if you can use AI just to figure out a 1% incremental increase in the ad revenue, that's a huge swing. 2% bigger swing, 3%. It's really insane what they could be able to do. And so yeah, I don't know. I mean, Meta seems pretty solid. Going to Microsoft, again, a lot of capital expenditures on you see here Microsoft, its mega cap tech peers racing to build data centers packed with chips for developing artificial intelligence models, running increasingly hefty workloads. Net expenditures, assets acquired through finance is up 27%. So I mean, that's a big increase too. I mean, they're just dumping all of this into building out these data centers. A lot of them are coming up around, I think, so where I am in Northern Virginia, I just saw this thing, 25% of all internet traffic goes through the server farms out in Northern Virginia here. And Amazon, Microsoft, Meta, all these companies have these giant data servers just laying over the landscape. It's pretty wild.
Takes a lot of energy to run those things.
It
That's
does,
the
which
whole
brings the
bottleneck.
news.
Wouldn't that be ironic if the thing that slowed down the development of AI was the issue of power? That's like,
I think it's going to.
it's like the oldest industry in the world, power. And here it is. We can't even manufacture enough power to do what we want. That's wild to me.
Totally. I think that the utilities companies, if you're looking for a downstream play, companies like Constellation Energy, NEE, these companies longer term, I mean, especially Constellation Energy is just, I mean, that's a big one. There's
Got to go nuclear.
Yeah. Well, I was going to get to that. You got to go nuclear. So we have Oklo. They got earnings coming up next week. No, 2 weeks from now. But so Oklo, right? Is it's still sub $100. I easily see Oklo going to $100 quickly.
They're kind of behind in the regulatory approval, though. They really don't even have anything right now.
They
It's
don't.
all based on the future. So
Yeah.
it's a really speculative play. They're running on fumes at this price.
Yeah. So I mean, SMR is in the same boat. I mean, if we look at their last earnings, they had, um, 13 million in
They're
revenue.
way ahead of Oklo in terms of regulatory approval and applications and the government signing off on their model. They're way ahead of Oklo.
Yeah, and then BWXT is already an entrenched nuclear player. So they're, they're actually headquartered in where I was born. But
That's
yeah,
the solution, though. Nuclear has a bad PR, some of the worst public relations that I've ever seen in an industry. You had Chernobyl and all that stuff. But this it's probably the future. You're getting away from fossil fuels. I think that nuclear is going to be a huge thing, and it might end up being the crazy solution to faster growth within AI.
well, that's why they're all, I mean, Google, Amazon, Microsoft are all investing into these nuclear companies, building out these nuclear powered data centers. And again, so, the whole thing with nuclear is that with SMR and Oklo in particular, so we all know like the 3 Mile Island, right? We also know the pictures of the giant nuclear reactors that are like skyscrapers. But really the new technology is these small modular reactors that can be built on site and like fabbed out pretty quickly and like Legos, like Lego blocks. And they're much cheaper. And if you don't think this is real, well, the Trump administration has fast tracked development and regulatory approval of a lot of new nuclear reactors. I think we have a few coming online in the next year or so for the first time in a long time. And yeah, like what Jack said, nuclear is not. I think the environmentalists, in the 70s, kind of poured cold water on it, but it actually is. With modern safety measures, it actually is the cleanest form of fuel, right? It's way cleaner than fossil fuels, which is kind of a oxymoron. If you're an environmentalist, right, you want the cleanest form of fuel that wouldn't pollute as much. But
Yeah,
nuclear,
you get back into that story though. It's like the oil companies planted all those environmentalists and said, "Hey, man, let's never let this nuclear stuff take hold because we're running the show." So yeah, it's been a dirty thing with nuclear, but it's ironic that it's the cleanest. But yeah, the oil companies don't want to see this, and if it does get going, they're going to be at the forefront of it. They got the most money, so it's the future with nuclear is exciting.
yeah, that's a good point. Yeah, I'm I don't. That's not surprising actually to hear that they were the PR funders for this.
Yeah, they
Um,
rule nuclear. Yeah.
Yeah, so but so yeah, so so nuclear, look, there's SMR, Oklo, there's BWXT, um, and then there's the traditional ones like Constellation Energy, which provide just a variety of different energy sources. I don't think they dip their toes into nuclear particularly. There's also Brookfield Energy Partners, which I do think is BEPC.
I think just BEP, right?
So there's BEPC, which is one of them, and then maybe BB. What'd you say?
BEP,
BEP.
and then
Yeah, so
there's
there's a few under the Brookfield
yeah,
um,
Banner.
umbrella,
Yeah.
but this one's uh, off of all-time highs. So I would definitely be watching Brookfield Energy, BEP, to see. I mean, this is if nuclear is the future, right? These companies are all going to be positioned to provide this immense power generation for all of these capital expenditures that are happening with the data centers and stuff. Um, Another interesting thing, and this was a little so in Microsoft's earnings report, was CoreWeave. So 72% of CoreWeave's revenue in the first quarter came from Microsoft, which uh, you know they also are connected to NVIDIA. But if Microsoft's buying a ton of these new AI chips, CoreWeave does seem to me, and it's up on today. That's just significantly off of all-time highs. I don't hate this play for I wanted to see it cross back above the 50 before I would go long on it, but they're intimately involved with NVIDIA. Um, Allegedly, some might say too much, but they also, while Barron's here is saying it was paywall, so we can just see the headline here. But while they're saying that this is a problem for CoreWeave because it's so reliant on Microsoft. It's also an opportunity if Microsoft is it just, if Microsoft is just crossed the 4 trillion market cap, joined Nvidia, I believe, and if they're just ramping up this investment, you would think that a lot of that money, even though yeah, it's a huge portion of it, but it's good if it's a huge portion, and they get put more money on top of it, you would think CoreWeave is just going to continue to perform. So yeah, so look downstream, right? Microsoft is expensive, Nvidia is somewhat at AVGO. All a lot of these Meta is obviously really expensive, but look downstream, right? What are the picks and shovels to keep to that are cheaper that you can get in at a better entry point? Stuff like the nuclear companies, stuff like CoreWeave, ACLS, Exelixis is another one that that I do think has some room to run if we can hold over this resistance line here, our support zone. So, But yeah, man, pretty crazy. I guess on the back of these though, I mean, what's the outlook for August? This is the last day of July, right? So what are you guys looking at for August? How are you positioning yourselves? Do we slow down? Do we just on the back of this earnings? Nvidia is probably going to be good, you know. So is this going to just be the thing that gets us up until September at least?
You got an opinion, Jack, or I can.
Oh, go ahead, Kane.
Yeah, all right. Yeah. So for me, the great thing that I love about the markets is that it'll tell you what it wants to do every day. So I don't necessarily have to project out and like, oh, for the entire month of August, I need to be planned and prepared for this. I mean, sometimes, yeah, it's appropriate. There are large market forces that you can see, but right now, what's happening right now with the insane amount of volatility that we have, but it's not showing up. I'm sorry, I should say implied volatility. We have an insane amount of implied volatility, but we have an insane low amount of actual realized volatility. Those two things are too far apart for my comfort. So one of those two has to break at some point in time, and probably sooner rather than later. And I don't want to guess which one is going to be the one that breaks. So I just take it one day at a time, because the market gives me new data every single day and it tells me how it wants to behave on a daily basis. So I'm shrinking my time frame. I'm looking at shorter term and not trying to look at things 1 month at a time.
Jack?
Great. Yeah, same. I don't try to predict anything. I just react to things. So, if something crazy happens in the market, like a stock popping up higher, I'd react by, shorting that after hours. And I just taking it one day at a time. It seems logical that we'd have a little bit of a pullback in August. I don't know if that's seasonality or what it is, but it would make sense that the market and buyers would just take a rest. And, a little bit of slowdown in buying would mean the market would come down because there's been so much buying, volume on the buy side comes down a little bit, stocks will come back a little bit.
Yeah.
But hey, in the longer term of things, it has to come down a little bit in order to make another new high. It just
Right.
can't, it's going to run out of gas, so to speak. So I have no expectation for August. Whatever cards it deals me every day, I'll play those to the best of my ability.
Yeah. And to Jack's point, at some point, capital runs dry, right? At some point, it's already all invested somewhere. And so it has to come out of something in order to go into something else. And so that's why you get pullbacks in certain markets, right? So if I'm I got tons of profits in the equities markets, and then I see opportunity somewhere else, and I don't have any dry powder anymore, I'm going to pull some money out of the equities markets, and I'm going to put it into wherever I see that other opportunity is, because all I see on the SPYs is just barely kind of floating upwards, whereas the other one might be a better opportunity. And then at some point that market gets overdone, and then they'll pull money out of that and stick it back into the equities market. So I don't know how much dry powder there is around the world, and at some point in time we need to fill the coffers back up with cash before we can go higher again.
Yeah, absolutely. I mean, I don't know. I remember reading a couple months back, there was like a record amount of cash in money market funds that could be deployed. People were kind of waiting on the sidelines. I do wonder myself if like with after this earnings season, people see the numbers, they see how high it's going to go. Do people start moving money out of that into equities, and that just sends us higher for a little while longer.
That would definitely be a take profit signal for me.
Yeah. What's that? I was looking at that report for institutional involvement with
Yeah, it's NAAIM.
NAAIM.
Yeah, I would just pull that up also. You're seeing you're seeing a tiny bit of sell-off. Yeah.
Ooh, yeah, look at that. We're down below the 80.
Yep.
So Kane, you want to explain to folks that haven't been here? We look at this pretty much every week, but what does this mean? I think this number was just released on yesterday, Wednesdays.
Yep. So this just came out, yesterday's number. It comes out weekly, and basically it is a sentiment gauge, or actually how professional investment managers have deployed their capital, and they can leverage themselves. So you'll see these numbers go up to 200, but generally you don't really make it far beyond 100. If you're at 100, then they're basically fully invested into the markets, and that's not sustainable. You can see we almost tagged 100 a few weeks ago, and now we're coming back down. That implies that professional investment managers are already starting to move back into cash, or lighten their exposure to equities, I should say, not necessarily cash. So that is a sign that of a potential pullback in the market. So yeah, Alex is showing you the S&P on the bottom of the screen right there, and you can see parallels. Every time we hit that 100 or go a little bit above it, then that is associated in the near term, within a couple of weeks, a pullback inside the S&P 500. So now that we got that tag of almost 100 a couple of weeks ago, now we've got 2 weeks of data showing us go lower. Normally, so if the market does keep on moving higher, the implication is that that's on the backs of retail dollars, and those are the last dollars into the markets.
Yeah, those are the ones you want to avoid.
That's right.
Chasing that high.
So this the NAAIM, that's leading a little bit of a leading indicator. It looks like the S&P hasn't kind of up with this downturn yet.
Yeah.
Yeah, and this is just them rotating into into cash, not any particular sectors, Kane.
It could be anything. The only thing it tells us is that their money is leaving equities.
Yeah. Yeah.
Profit taking, that's their job too, right?
Right.
It might not be that they're afraid that the market's going to go higher and they'll miss out, but a lot of it is just, like I say, taking a profit. That's the best part about trading. And when you see that coming down, they're probably locking in those gains.
So what do you so let's dive deeper into this, Kane. What are you seeing on the gammas and stuff? Do you want to share your screen, show us what you're looking at?
Sure. Yeah, I can share that. And oops, am I sharing this screen over here? Let me share a different screen so we can get better resolution. Okay. So here is actually, we're working on our own software. This is just a prototype. It's not nearly ready yet, but just to show we are working on our own like enterprise, because I know everyone always asks me, they're like, Kane, can I have your sheet? Can I have whatever? And my sheet, if I gave you the sheet, it'd be useless to you because it's just an interface that pulls data from a whole bunch of other places. So right now on a 0 DTE basis on the SPY, we see that there is kind of this widespread exposure up to 640, and then this kind of spike on the downside to 635. For SPY, that means that we're not completely decided. The market maker has exposure across all these strikes, and so the market has the potential to move up and down in here. What's interesting is that the SPX is a clearer picture, where you've got that clear 6,400, which is sort of 640, that 640 level. Not exact, but pretty close. So the SPX, the way the market makers hedge themselves for the index is through the futures. And so they're going to be active in the futures market, which is not quite the same as being inside of the equities. There obviously is a very large correlation and a direct relationship, but again, it's not one-to-one. It's not perfect. So we are seeing them preparing, or we're seeing exposure in the higher numbers. If I look at say to the 15th, so to mid-month, oh, well, it's taken a while. Doesn't look like I'm getting good data on the SPY or SPX. That's interesting. I'll have to look into that. And then here we go. So in the SPY, you can see that there's that spike right there, and we've got spikes, not nearly as big, but there are spikes at 645, 650, and actually even growing at 655. So that's new. That 655 wasn't there a couple of days ago. And so there is some positioning of the market trying to go higher. But again, you also have this 625. So it doesn't mean that we necessarily go directly higher, but what it does kind of imply that at some point in time, those levels are going to probably get hit. And so we could pull back all the way to 625 and then go there. At least that's purely from the gamma perspective, not tying it with technicals, not tying it with anything else that is going on. But what these levels tell us is that if it does move in that direction, the market maker is going to support that move. So we'll go to down to 625 to back to 640, 650, or we could tag that 640, which we already have today, for trade back downwards. We don't know exactly how that's going to develop. We just know that if it moves in a certain direction or another, those particular moves would be supported by the hedging activities of the market maker, which makes it just that much more likely and that much more powerful of a move in those directions. Now, we are seeing a positive sentiment inside of the markets. And overall, if we look at things technically, there's no reason to be pessimistic about this market. We are in an uptrend, period. So it doesn't matter how many people are telling you it's time for a pullback. Yeah, maybe it is time for a pullback. Maybe we do get the pullback, but this market is telling you that it wants to keep on going higher. And today we saw Meta and Microsoft, and that caused that gap up today in the SPY. And then, yeah, we've sold off some, but look, it got bid right back up. So, the market is strong. Selling is being purchased. Now, is it being purchased by retail or is it being purchased by institutions? That is an important distinction. But right now, so based on the NAIM number that we just saw, the implication is that most of the buying is still in retail, is actually in retail, not in institutions. And so that just gives it a little bit more likelihood that we're going to have a little bit of a pullback before we go up. But this trend is strong, and you don't want to bet against that trend until it actually breaks.
And you don't want to try to time this market either. I mean,
Right.
we can all say, hey, it might have a pullback. It's due for a pullback. It should pull back, but you got to be real careful. I don't know anybody that can pick tops and bottoms. I prefer to buy high and sell higher. So I'm not.
Well, that's how I mean, markets over the long term just go up, right?
Yeah, that's
U.S. markets.
yeah.
U.S.
That's
Well,
clarification.
yeah.
Yeah, we're not talking about we're talking about the big kahuna, the USA.
It's the only market that matters.
Yep.
I don't even look at foreign stocks or, I don't believe in the accounting in anything outside the US, and I barely believe in the accounting in the US, but I don't do anything with foreign stocks, just so you know.
Well, it's always like, if it's all shady, right? It's all everything's comparative, right? It's like this whole thing is like it's the best of the worst, America, right?
Yeah.
Whatever it is.
Yeah, it's
So
the best of the worst.
yeah, so it's even if it's all kind of wonky, this is the least wonky of the competitors.
Yeah. Well,
Um,
that's why I never look at a CPI or a PPI or the beige book, or that stuff has never helped me. It's just kind of a waste of time. I see no correlation in the government numbers, and I don't even believe they can get it right down to like that precise. So
Well, if Jack doesn't like the analysts, he definitely doesn't like the government analysts. Well,
it's not that I don't like them. It's just they've proven they can't get it right. So that's where I'm at on analysts. And I've met some of them, and it's no surprise they can't get it right because some of the stupidest people in the stock market are analysts. Like a Wall Street analyst. No, they've never traded. They've never invested. They got no clue. They're just reading, old news and trying to predict the future out of old news and out of old data. And that's predictive analysis where you're reading quarterly reports and you're following earnings and all that. All that is the fundamental side of analysis, where I just prefer to use technical analysis and be reactive and not use any fundamental analysis at all. I don't read anything. I don't know if I got adult ADD or I just don't. I hate reading quarterly reports, but everything I think you need to know about a stock is already priced into the stock.
I agree. The analysts, every analyst I met is aspired to be on a trading desk, and they're not there. So
Yeah, that's right. That's exactly right.
They're not sending their best, folks, to the analyst side. Yeah. You would think they would have more of a B. They would talk to people, but I guess, yeah, it's wild that the companies can keep all this under wraps for as long. Bodine, economist. Yeah, I don't know if you want to get Jack started talking about economists. Put 100 economists in the room.
Oh, we could get me started. I'll just tell you the same thing. The guys I've never seen more wrong are like these perma bears, right? What's that one guy's name? See how much I don't even pay attention to the name, but that one guy, he's always out there telling, the world.
Shift?
And man, there's so many of those guys, the economists, and I don't really hate them. I just don't bother with them because the stock market is not the economy. So
Right.
I don't want to be reading a bunch of junk
Yeah.
when I could be fishing. Opportunity cost, right? If I'm going to sit in here all day and read quarterly reports, what am I giving up?
Absolutely. Yeah, Bodine, I don't know if that's who Jack's thinking about. I was thinking about Peter Schiff, yeah.
I think this was El Rain.
Oh, Muhammad El Arian.
Yeah.
He used to be my CEO.
Really?
Oh,
Yeah, over at PIMCO, he used to be my CEO. That's funny.
Wow. Yeah. What do you think of him?
I mean, he's a bright guy, but exactly what you said. The economy is very different, and so you see him. I mean, he has a background from IMF, World Bank, all sorts of, and then he's an economist. He's like, if you want to think about big moves over decades and decades, or maybe 100 years from now, the guy has good ideas, but. Like what we were saying earlier, like the market will tell you what it wants every single day. So why not just go directly to the market? You're looking at technicals, you're looking at trends, things like that. You're going to getting a feel for exactly what the market is looking for on a day-to-day basis. You don't need to look at that other stuff.
Plus, that stuff it's scary. He really, I mean, he makes predictions like scary, wild stuff. Some of these people do that, and you get done reading that or listening to these idiots, you want to sell everything, and then you go outside, take a walk, you realize that guy knows nothing. I'm not going to sell all my stocks, right? And they just keep going higher. So, Kane, you're exactly right. The market will tell you, the market will show you everything you need to know is already built into it. Maybe in the 70s or 80s, an analyst might have known something that the public didn't know. But now with the internet and the way information travels, there's really nothing that isn't priced into the stock.
yeah, my take on econ, and I studied econ in college, but my take on it is that it's not like physics. Physics you uncover, or science, right? Same with political science. Real science, you uncover the actual underlying forces, right? So they are proscriptive, and then the fake sciences, which I put econ into, is outside of like the basics, right? It's a descriptive science. So you try and look back and find patterns and laws that apply only in retrospect, and then you try and forward project those to the future, and it's impossible. And I don't really believe that it's like a real science, because one, it's all dependent on human activity, just like politics is, right? It's all dependent on the human regime that's running the system, and humans are incredibly complex creatures, and our systems that we create are incredibly complex. So you just really can't.
That's the word for the economy. I think it gets more complex every year.
Yeah.
It's nothing like they used to analyze the economy in the 80s. Now where we are now, it's totally different. And I think it's just too complex.
Yeah. as you're saying, the dismal science. Yeah, science is a science is a stretch. Again, I really I studied econ. I don't besides like the micro stuff, right? The micro econ, supply and demand, like the general principles. You start getting into the state level, right? And it's so hard. You can't pick apart anything. It's you have this the governments with giant guns doing certain policies, and that just gets wacky, man. It's too many factors.
It's a
And
good
there's a
thing.
reason why.
Yeah,
Go ahead, Jack.
I was going to say it's a good thing the stock market is not the economy. It'd be way harder to study that, right?
Yeah. We hear like, what are the words that we use to describe markets? We use fear, we use euphoria, we use sentiment, we use confidence. Those are all emotional words, right? They're not hard, like science data words. They're not absolutes. They're feelings. And so I always treat the markets like a baby because it doesn't have very sophisticated or developed feelings. It just knows that it's, upset about something or super excited about something. It doesn't have like these emotional checks and balances. It's not a mature adult. It's just a baby. So you got to treat it like that. It's going to jump around and do its thing. And so you're not trying to apply logic to it. You're trying to apply, emotional management to it and managing your own emotions while you're dealing with it at the same time.
All the people that I know that tried to apply logic to it are no longer in the business. And a lot of that was Tesla back, how can this thing be $400? And, I'm going to short it and blah, blah, blah. And then they got killed.
I had an accounting professor who used to rant in the early 2000s. How can Amazon be so blah blah? Their book value is like zero.
I know. Yeah, my guy, a close friend of mine, he blew himself up like that, and he just say, Jack, how this makes no sense. And I said, it doesn't have to make sense, right? If it made sense, then it would make sense. It's better that it doesn't make any sense to me. So he's trying to go like you said, there's no way Amazon should be at this price, and people make a move on that, and they're wrong trying to make sense out of it. I like to make sense I could spend. I don't want to make sense in my head. Right?
You want to make good sense, the real sense.
Yeah, real sense. CENTS.
Yeah. Yeah. Well, and I think that just gets to the point, right? When you're trading, don't stick to your rules, man. If you have a system, don't you bring, it's hard. That's the hardest part of trading. And I think a lot of trading, if you're an active trader, it's psychological because a lot of setups will work, a lot of different strategies will work. But then you start injecting your bias when something goes against you or doesn't work out, and you're like, well, it's not exactly meeting my rules, but now I do think the stock is going to go up though. And then you go in full port, and then it doesn't. So just you gotta turn off, just like what Kane said, right? Like turn off that higher level biases that we all develop as we get older, and just trade like a baby. You have rules, be just stocks, your rules get met, you just mechanically, right? Like a little computer system. Um, Speaking of that, so if you do so what is it? Patricia, Sia, Jason saying, oh yeah, do we have any economists listening to us right now? 'Cause, just oh man. Anyway, do we have any economists, no harm, no foul, right?
Well, they know it's a bunch of junk too, even if they are an economist. Maybe they wouldn't want to admit it, but it's just fluff.
Yeah. Yeah, totally. And but back to the rules thing, right? So again, if you want to trade, I think if you want to trade successfully, especially, you have to have criteria that you take with every trade. And you stick to that criteria, and when it meets it, you go into the trade. When it doesn't meet it, you stay out or you get out when it turns against you.